Hey everyone, thanks so much for tuning in again to Weekly by Walker, where we're really highlighting consumer credit trends and possible accommodation standards and changes week over week. This week we've got an important announcement that we're pleased to announce, the inclusion of industry-specific FICO scores into our weekly credit trends reports. You're going to be able to see those changes integrated into our origination view as we talk through those in just a moment. But first, you may have seen the press release from earlier this week. We're just really excited about this enhancement, and we hope that you are too. But first, we're going to go right into portfolio. And from a portfolio perspective, things remain calm week over week for the most part, at least from a total debt perspective, where accounts balances and delinquencies really all remain stable week over week. We did notice a couple of things we want to point out with some installment accounts, and that's home equity and consumer finance, where we will really see increases there in delinquency as well as accounts and balances, which we'll talk through in just a moment. First, we'll start out with auto. Looking at auto week over week, really not a lot to call out here. It's remaining stable. It was a slight decrease, but not enough to move to percent. So we're still holding at 0.91% from a delinquency rate perspective. And it's important to note that this is driven by auto loans. Bank card, the only thing here to note is really the delinquency. That continued to decline, and it declined another 2% week over week, specifically compared to last week. Looking at utilization, it's remained here for about this is the third or fourth week, holding at 19.2%, still below that historical average. Private label card as a trend does follow bank card, and no exception here. You can see that the decrease in delinquency here is just slightly higher. It was about 4.9% week over week, still remaining around 4.1%, so still above 4. With utilization, second week in a row here at the 13% as well, 13.4% as well. The two items to note really are spotlights for this week from a portfolio perspective, starting with home equity, right? And home equity installment. Here, not only did balances and accounts increase slightly, but for the fourth week in a row, we've seen delinquency increase. It's still relatively low, compared to historical trends, but this is the fourth week, and this week it rose 0.5%. And then from a consumer finance perspective, overall, 4.1% increase in delinquency week over week. This was driven by consumer finance installment, which itself rose 7.6%, and balances and accounts 1.2 and 1.4% respectively. Digging into originations, not a story change here. Still following the trends from most recent vintages and comparing those to the previous vintages, and how some of the products which we're going to call out here, we're seeing strong growth, and also subprime, the decrease in subprime shares, right? Still following true for auto, bank card, and our private label card, which we'll see in just a moment. So this view, this is the auto originations, right? And we've got a view for both Vantage as well as for FICO. And so this week you're able to see each one of these in our originations report. So with these trends, you can really see here the decrease in the subprime share week over week, still holding strong this week. Same thing for bank card. Bank card subprime shares declining from both a Vantage score and a FICO score view, which you can find in the report, and private label following suit. The one thing, private label, those previous vintages there, sort of the darker shades that we're calling out in the last 8 weeks, have been growing strong, and particularly compared to the pre-COVID period. So we're seeing those rise, but also seeing the share of subprime continue to decline there. Last, we're going to touch on our possible accommodations. Just a reminder for everyone that possible accommodation, here's any form of relief, right, that lenders are offering, to borrowers during, a time of hardship. Week over week, these have remained stable as well. So 3.6%, that's the same as we reported last week. That is excluding student lending, which itself is holding, just a little greater than 90% at 91.5% of all those under some form of a possible accommodation. Really, the only item to note this week was auto, which it increased 0.3%, landing at 7.8%, and then mortgage remained the same at 8.7% week over week. And so last, we want to remind you to dive in and join into our Market Poltz webinar series. We've got one coming up on July 23rd, which is really, we've put these together to give you deeper insights, right, to help you, navigate this environment, but more importantly, to operate and manage your business, the best that you can. The topic for this one is use of advanced analytics and high frequency data, to really help you adapt to that, the new next normal. This is going to be hosted by Prasanna Dior, Chief Data and Analytics Officer for Equifax, as well as Scott Zoldi, Chief Analytics Officer for FICO. So we're really excited about this session and want to make sure that you tune in for this one. And a quick reminder, should you have any questions about any of the data that's presented here today, any of our, quite honestly, any of our data suite of data products, data visualizations, anything that I can help with, I can be reached at christopher.walker@equifax.com. Again, christopher.walker@equifax.com. Thanks so much for tuning in, and we'll see you next week on Weekly with Walker.